All right, welcome everybody. Let's do a quick sound check. I believe audio is coming through and video is coming through. So just making sure it actually is. Yeah, I believe we're good. All right, guys. Welcome everybody to the training room. My name is Saul. Glad to be with you. Before we get started, please. Anything we're going to do here is not meant to be a buy or sell signal. Remember, this is only the way I read the charts and I analyze trades and I manage trades and I approach the markets. So this is not meant to be any recommendation for buying or selling any asset on any time frame. I want to show you just some principles that you can go and apply to individual situations and to your strategies. As every Monday, we're gonna go through the calendar. We're gonna see what's the fundamentals that we have during the week, and we're gonna do a quick scanning of the daily charts to find the key levels on the charts to try to find opportunities to the upcoming week for more mid and long term opportunities. If we have time on the second half, we might go to lower time frames and try to do some intraday trading or some scalping. So Rosh, welcome. Alex, Thomas, St. James, Patrick, welcome everyone. Okay, let's jump into the charts. Before that, let's wait, I'm not sharing. There you go. Okay, so let's just review what we have this upcoming week, and we'll see how the market is reacting to that. And then we'll jump into the chart. So earlier today we had a CPI in the franc very close to the forecast, just 1 pip up from the forecast. 0.1% up from the forecast. So there was a little reaction in the market. We'll have a look at it, but not very significant. That was already priced in the charts. Tomorrow we have a climb and count change. That's not a big announcement, okay, not a big event. So there's a lot of volatility, but doesn't tend to start a new trend or something like that. We do have CPI. CPI has been very relevant lately. In the US, we expect even less CPI. Okay, so less. The inflation is decreasing in the US. So if there's no surprise, we should continue seeing this weakening of the US dollar. So unless there's a big surprise regarding the forecast, we shouldn't see something different to what's happening already, this US weakening. Let's see, just remember, if we have even less inflation, so there will be no reason why keep increasing interest rates, so there will be less demand for the currency, and that's what weakens the currency, okay, against other currencies. And then CPI in UK, this case the inflation is still very high. Okay, it's expected to come a bit lower than actual, but still above 10. So we'll see this final number. I do expect more increments in interest rate in GBP. UK is not, they don't tend to have these larger CPI. So I think there will be some efforts to decrease that. That will be increasing interest rate. So we might see more demand for the currency. Core retail sales, volatility will not much than that.
Employment change and rate in the AUD, we'll see how that impacts, but it looks steady in percentage, an increment here, so we'll see how that goes. Then PPI, again volatility, but not much than that, not more than that. So in terms of what we want to be mindful of, that would be CPI tomorrow in the US, and then CPI on Wednesday. All the rest, they will bring a volatility to the market. There might be some movements, some spikes, but they don't tend to be trend changers or initiators. Okay, so just be aware of those. Let's see how let's see. I need to change my screen. Ricardo, hello. James, first time live, managed to catch this live. Welcome. Yeah, keep coming. If US CPI is dropping over the next 6 months, NFP continue to exceptional wear, whether there's a strong USD until inflation is maintained around 2%. Yeah, I can't remember the target for inflation. I can't remember if they said 2% or 3%. But yeah, but we'll try to see the inflation going down to those levels. But in more predictable steps. Okay, that's important. So the conscious day trader, good afternoon. Is that Yanis? Yeah. Hey Yanis, how are you? Good to see you. Okay, guys, let's start with the Euro USD, and let's start try to identify the areas, and we're very accurate to from next week. So the only thing is we have like a discrepancy, okay, between technicals and fundamentals, okay, and let me explain that. So last week we identified, okay, and on the hour list will be very easier to spot those, okay. We identified this level, this area here, the mid-range demand and the extreme demand at the bottom, okay. Now let's go to the dailies and let's look at that. And we said we're coming from a very strong supply after not a lot of demand at this channel, so that was our first target, and the next target would be the extreme demand down here. So after this supply, we might see a reaction from mid-range demand, and after a pullback, okay, as we go up, I will be looking for opportunities to sell the market and to do another push to the downside, okay. The only thing here is that means technically I am expecting the euro to continue lower, okay, and we said against the USD, and we said fundamentally I'm expecting the USD to weaken, okay. So fundamentally I should be trying to catch the leg higher, okay, the turn and the continuation higher. My fundamental reading says there's a lot of supply here, and we might continue going up to the next demand area, okay. So when I have like difference between my fundamentals and my technicals, I tend to go with my technicals, at least short term, and then if I find a way to match my technicals to my fundamentals, then I will try to go with my fundamentals again, okay. But I trade what I see, not what I think I understand of the markets or what should happen in the market. I go with what's happening in the market. So at this point, we already reacted to this demand area, okay, to the mid-term demand area. The reaction was this tail. Let me mark it, okay. This movement there. Let's have a look at the hourlies, okay. So we we did have this reaction, one, and this reaction here, and probably this one right here. So we already tested that mid-range demand area, and now we have the potential to continue lower because demand has been consumed already. So now we have the chance to break the demand area to the next demand area, which is a key interest area or area of value. So we might be targeting that area down. So my short-term approach to this, or mid-range approach, is, or my bias from this context, is to go short. So if I'm going to lower time frames afterwards to try to pick a direction in my trading, I'll go short, okay? Because I think the market has already reacted to this demand area, and we're going to test the next one, which is down here. So coming back here, and then once we get to this demand area, okay, if the market goes to this area, then we might see something, or new buyers coming into the market, or new fundamentals, or something that makes the next movement from this area to the upside, and then I have a new alignment between my technicals and my fundamentals, which is both a weak US dollar, okay? But right now I want to be more focused on the short side than on the long side. When we go to this low area here, I want to see how price action is forming and what's going on with the fundamentals and with the technicals, and maybe from that point we might have the opportunity to create the next leg to the upside. Until then, I think we have already tested. Buyers had already the opportunity to move the market higher from this area, and they did it, but they're being rejected very quickly. So we might break during the week this area and go to visit the next one. Now, if we just see the whole range, okay, if you're not already in a trend, okay, we're at the in the lower part of the range. So going short right now and placing your stops all the way up there kind of doesn't make sense in terms of risk reward ratio. You wanna find some areas where you would stop your selling positions. That would make sense in terms of risk reward, okay? Because if you're aiming, that's going to be your target, and you place your stops, let's say there. That's 130 pips loss, and that's a 1-to-1 risk reward. Okay, so if you're comfortable with that, you can take it. If not, this is a no trading area. So you wanna wait for market to come higher and then to short, or to wait for the market to come lower and then to look for buying opportunities. Okay, right now it's like a no trade area, but my bias is slightly bearish. Okay, that's for the Euro USD. Now let's jump into the Pound USD. Pound USD we did very good last week. Okay, we're holding on a short trade, and I missed by a few pips my target area, which was slightly lower, so I took it up a little bit higher to take profit. But again, I said we have, let's see the reaction. Okay, we have different supply areas being formed. So when the price approached that area, okay, we said if we had supply being formed, as we create pullbacks to those supply areas, I will try to short the market again. So then we see, the market approaching supply, and it really depends on how you market, because that's a breaking area of the supply. So that's the very bottom area of the supply area, and you have the decision area of the supply. So if you had waited for the decision area, which is up here, you have missed the trade. If you have gone with the breakout area, which is down here, you might got triggered on the supply area. However, that's the reaction from the supply area. If market goes again, we might see all the whole supply area being consumed and going all the way to the decision point, and we're kind of going again down. Okay, I don't think we have tested the whole demand area, which is down here. We haven't got there, so I think we're going there, and from that point and waiting for what's going on with what's going to happen with the CPI in UK, we might see a reaction from here to the upside, and then a new alignment between technicals and fundamentals. Okay, we said inflation is high in the UK. They will try to decrease that. The way to do that is increasing interest rates. That will bring demand for the GBP. So we should see a strengthening of the currency. Right now, I'm willing to short all the way to that area, and probably in that area, my technicals and fundamentals will realign, and I will be looking to buying the currency. Okay, so short term bearish, in a more long term perspective, bullish. And who knows, we might just stay, in this whole range for a few weeks. We might just go sideways. Okay, that's something that might happen. Okay, we just need to create these different scenarios and different potential outcomes that might happen in the market, and we create plans. Okay, if we go down, okay, I buy. If the market goes up and this happens, then I sell. If the market starts going sideways, what do I do? So I prepare my different scenarios, and I prepare for those, and then I create action plans for each one of those. So I think we're going lower again, and from there we might react to the upside. The data tomorrow. Yeah, Patrick, again, long-term, Patrick, you're looking for long Euro USD, meaning you think the USD is going to weaken, or you're looking to short Euro USD for a strong USD. Pretty much the same story across all the majors. Okay, we have, I remember, we just use different computers, but we had this mid-range demand, and we have the extreme demand that we haven't tested. I think we should be going that area, especially because we haven't tested that supply. So we might go a little bit higher. I don't know how it's going to get there, but I think we need to visit that area, and from there to create a new push to the high side. We had a very strong supply here. There's potential for continuation to the downside, all the way targeting this demand here, and from there, depending on fundamentals, a potential turn in the market. The one that looks different is dollar yen, and it was pretty accurate to what we thought last week. Okay, we saw the break of the channel. We identified there is fresh demand creating that breakout. We analyze how to, how when a breakout of a channel is going to happen. So you want to make sure there's demand behind the breakout, and we identify the demand here and even the gap after Sunday opening, and we said after pullbacks towards demand, you want to be building your long position. So in this case, I have a strong USD bias. Okay, so the clearest one for me is this one. Okay, if I go now to lower time frames, my clearest bias here is on the dollar yen long. I think we have not. There will be some resistance here
but you can see how there's not a lot of supply around this area. Okay, the supply we had it here. Look at this supply area. That push lower, but we have already tested that once and probably twice, and we reacted to that, and then the bull just took over that market. Okay, and then all this mid-range supply becomes a swap zone, which is that becomes into demand. But up here we don't have a lot of supply. There will be resistance. There will be some selling orders waiting here to get triggered. But overall, I think we have the potential to break that resistance. The challenge with trying to trade the breakout to the upside is where would you place your stops. Okay, if I go long right now, if I go long, I would need to place my stops, let's say below that wick over there. So that's more than 300 pips, and then I need to get a good risk reward. So let's see, where's my 1-to-1. So that would be 1-to-1. That's achievable because there's supply back here. So next stop might be there. So if I go long right now, and I place my stop below that wick and my target below the supply area, that would be a 1-to-1 risk reward ratio. And if I'm very patient and this continues the whole channel, we might go all the way to the next supply area, which is probably there. And that's almost 800 pips, almost 3-to-1 risk reward ratio. The other way to approach this is to really wait for the breakout, and after seeing confirmation and this area here becoming a new demand area, okay, that's what we want to start learning, how to spot those areas. So a strong breakout there, this area becomes a new demand area, and then after the breakout we'll wait for the pullback towards that breakout area, which is a demand area being created, and then trying to catch the continuation. Okay, so that's the two ways to approach breakouts, and you see me doing that on lower time frames. Okay, instead of trying to catch the breakout and getting that risk of getting faked out all the time, you wait, you see, you confirm the breakout, and then you wait for the pullback, and then you join the breakout in the same direction. Okay, so that's for dollar yen. So we said dollar yen long, euro USD kind of sideways, slightly bearish, but at this area, the extreme demand, I might turn into bullish. Same for pound. I think we should be testing these lows, but from there we might turn into buyers. Patrick, I think short-term euro USD is down as dictated by the demand zone below the current level. But CPI is lower, it might drive euro. Yeah, so very similar to what I think. I think we're going down around this level, and as you mentioned, depending on how fundamentals comes out, we might see a reaction and a continuation higher. I agree with you. Would you wait for price to come back to daily order block? James, what currency are you asking about? Diana, I'm already long on dollar yen. I keep it open, I guess. Yeah, sure. If you're, what price are you long already? But yeah, if you're already long, I would keep it open. And let's look at the dollar CAD. What is it?
No. CAD. James. Okay, so not sure if you're asking about this order block, this one, the extreme one. And Diana bought at around those levels. Yeah, so Diana, you're long at that blue line. I don't know how heavy you are, but my stops, they still need to be down here until the breakout, because between your entry and where price is at, there's not a lot of demand or support, so price might easily go down again to check probably this area or even this area before continuing higher. Okay, so my stops would start here. After some price action, I might trail my stops to this area, and that's it. I would need to wait for confirmation, but yeah, but if you're with right position and you can hold your stops down there or even down there, I think leaving it open has a good potential to break to the high side. Yeah, so the challenge with waiting or not waiting, James, is that price, from this impulse might have enough strength in order to break. Okay, so if price comes to this area, I will be buying that area. Okay, that's a fact. But the price might take weeks and probably months to come back to this area, because if there's a breakout, if after this area here, okay, there was a pullback, and we're missing price action here, okay, because we're at the hourlies. But I'm guessing there was something there. If we go to, let's go to 15-minute charts. Okay, I'm guessing there was enough demand here in order to cause this movement there, okay, to bring the buyers. So if that was enough buyers in order to break to the upside, it will take a lot of time in order to price to come back to this bottom demand. Okay, so if you want to wait, that's, I guess, that's the sure, okay, or the safest thing to do. But I don't want to miss the trade just because I want to wait for price to come there. I would make a different setup. So I would, if I see the break here, I would wait for the retracement and then buy this area. And a completely different setup would be seeing price going all the way down to this area and then buying. Okay, I just create more opportunities to get into the market. That's it. But we might see a breakout without visiting this demand area down here. So if we only wait for price to come down here, we might miss the trade of the breakout setup. So would you look at gold? Seems to have found support around. I'm considering buying if it falls below that level. Selling me in gold next target, please. I'm waiting for the blue line ATM. Okay, gold. Yeah, let's have a look.
Gold. Gold seems to have found support around 1856. Okay, yeah, we analyzed gold and last week, and we said it looks very similar to the currencies right now. If we go to lower time frames, we can see the demand area that we haven't tested already. And meantime, we are creating good supply areas. This is very, very clear. And we created even this one. Okay, we have this little channel and a strong supply area. So it is holding the supply area. Okay, let's wait a minute. Consider to buy if it falls below that level. So this is just my reading, guys. If you have a different plan and different setup, you should go with yours. Okay. Short term, I think we need to visit this area. Okay, so we might push a little bit lower to the downside. We had a reaction, and we're creating very strong supply areas. So I think we have another push to the downside, and from there I would feel more comfortable buying. I wouldn't buy right now without confirmation. I would wait for price to come to the demand area, and from there I would buy. And here is very, very clear, and I remember this demand area being created, and that's going to be a strong one because we're analyzing this compression, and in other currencies that compression broke to the downside, and in gold it broke to the upside. So that established like the uptrend, and it pushed nicely to the upside, and then we have created since then fresh supply. So I think for a new movement we're going to visit that same demand, that area where we saw initially the breakout to the upside, but I think it's a bit lower. Let's see if I can. Yeah, it might be there because okay, let me do it this way. So that's one. That's two, and that's the breaking area, the breaking level. So that's also important. Wait, I think we lost the camera. My plan, I would wait for a little push lower, either to this area or to this area, and from there I would feel comfortable buying. Okay, I'm with you. Few more pips, and then the reward is great because stops are here, below demand area, and target potential might be all the way to this area right there. So it's a lot of pips. So that's a nice setup actually. Okay. James, same zones as you on gold. Great minds think alike. No, I'm happy, James. I think those are the areas. That's what I see. You think the highs from 1 hour 30 ago in AUD and will hold until day demand? Volume profile show bit lower in USD JPY. Agreed.
Do you think highs from an hour and a half, hour ago? I'm guessing you're talking about these ones, these highs will hold until daily demand. Hope I knew. Hey JJ. Look, those highs reacted to a nice supply, so we might see those holding, and those, you know, driving them, being enough to push the market lower all the way to demand areas, daily demand. But this push higher was also a nice, you know, demand or nice push. So we might see a bounce from that area. So I have no idea. Okay, we just create models. Okay, if you want to try to short that and, you know, set your stops and wait for the market to go all the way to there, so that's a great trade. Okay, that's a good, in terms of risk reward ratio, that's almost five times. But I don't know what's the you know, what's the chances of that happening. But if you continue doing that process, the risk reward ratio eventually will play in your favor. I just don't know. I can't be sure if that's going to be the highs before we go all the way to demand area. So, you know, for the gold trade, and it's something that I'll be covering this in June in my live presentation in the event. By the way, if you haven't got tickets, you should. If we have this situation on gold, for example, when we have a very large area that we can be active. Okay, let's go to the dailies. So I want to be a buyer across all this area. Okay, that's that's at 260 pips. Okay, to be active. That's a very large area, and between that area we have like two demand areas. We have this demand area and we have this demand area. So what I do is I start building my long position. So I don't know exactly where the market is going to stop and turn to the upside, but I think the next movement is a reaction from this demand, you know, to the upside. So what I do is I identify my potential entry points, and from there I start building slowly short positions. So I go short a little bit, and then if the market continues going lower, I go a bit heavier, and if the market continues going lower, then I go a little bit heavier, and that whole position, okay, those three entry levels should not risk, you know, the maximum risk allowance that I'm willing to risk. Okay, so if I want to commit 1% of my account, so I divide that 1% into 3 parts, and a 0.3 position I traded here, and a 0.3 position I traded here. And if the market continues going even lower, then I enter the market with a 0.3 positions. And if all that fails, I, you know, get out of everything down here. But then I have more, you know, the lower the market goes in my, you know, against me, I add into my position to, you know, to build my whole trade, my whole position. So how much do I risk per trade? Really depends if I'm just on my long-term setups and I'm going just with one position, like with one trade.
but it's usually about 0.5% or 1%. And then if I'm scalping and if I'm scaling into trades, then my whole setup, okay, these different entry lines, the sum of all of those, they don't risk more than 1%, around 1%, okay, but in a setup, not in one trade. And how much I recommend really depends on your objectives and your risk profile, and how much you're comfortable with. I would start with very, very little, and I will increase slightly. Swap rate if I buy gold and hold over a few months. So you can go to the specifications. So you go to specifications, Patrick, and you get the swap rate, okay, from here. And that changes on, if you different brokers and LPs, they give different specifications. Okay, let's see if we can find something that's doing something. See if we can get a reaction from this support. I see just the market coming overextended. My bias, I said, is profit points. So my bias comes from the dailies. I said I want to be going long, but then I need to go to a different time frame and start to identify those support, resistance, supply, demand areas, and build setups of those levels. And then on the 1 minute chart, I see this overextension towards the support. So I'm feeling okay just buying here to see if that reaction comes. Now, you have seen me doing this, taking three pips of profit every time, and doing that again and again and again, instead of trying to swing that. But if you suddenly see a increase in momentum in your favor, you might swing this for a little longer. So for the scalp, I'm happy with just taking a few pips and doing that again and again and again, because now if this comes down, that breaks the overextension setup. Okay, so the overextension gets invalidated by that white line. So that little pullback of one line might be enough to bring the market even lower to the next area that's here. So you either very patient and wait for this to come higher, or you're prepared for the next movement, which is down, and you add at this area there. Or you take profits, you take the 3 pip target, and then if the market goes lower again, then you buy again. Okay, so it's just different approaches to the market. Myself, I prefer taking small profits again and again and again, rather than being in positive and then seeing this position coming into break even or even negative, when I could have banked those 3 pips of profit. Okay, hope that makes sense. What's the minimum pips when scalp? Yeah, there's no rule on that. Depends on what time frame are you're scalping, and the market will go from key area to key area.
So in some time frames, in some pairs, that distance on average will be 4 pips, and in other pairs will be 10 pips. Okay, so it really depends on the pair and the time frame you're looking at. Now the market is stuck in that little range. If it breaks to the upside, we might see it going all the way to the highs. If it breaks to the downside, it will go to the next area, which is down here. And at that area, because I'm just starting small, I'm prepared to increase, to build my position. But I do need to be aware of that. Now for this specific setup, I think I need to get out of everything down there. So if I build another position down here and that fails as well, then I just top out of everything down here. Okay, so that's the break, that's the attempt to break. That's the close. Let's see if there's continuation. And now I need to watch how price behaves when it approaches this area here, because if it starts just picking momentum to the downside, that I don't want to be adding to that trade. If it goes slowly to this area, then I might consider adding. Lost many times when I tried to get minimum 15 pips. Yeah, so again, it's not a matter of and a hard number, saying 10 pips or 20 pips. Depends on the pair and the distance between key levels and key levels. Okay. So I keep reading price action, correct? So we had a kind of a break and a close, and instead of continuing lower, we had a bullish reaction. So that's kind of a false breakout. So then I'm comfortable. Not having the continuation lower gives me confidence on leaving this trade open. And an exercise I do a lot is just hiding my entry, and then watching at this trade, okay, at this chart. If I was just opening the charts, would I be looking to buy or to sell this market? And my very, very next trade needs to be a buy of this area, okay, regardless the trade that I already have open there. I wouldn't be selling right now to get to this point. I would be waiting for the market to come to this area, and then I would buy. So that gives me confidence on leaving that trade open. Hope that makes sense. Guys, I think we'll wrap up. I'll keep managing this trade. I just really need to run to a meeting. Just summarizing, we got my bias on dollar yen bullish, euro pound slightly bearish, but we might see the turn. And yeah, that's for next week. Let's keep an eye open on CPIs and the news announcements, and we'll do a review next week on how everything went. Okay, so thanks for coming and thanks for staying, guys, and until next time, bye bye.